Joining us now as part of our State of Investing series is CALSTRS Chief Investment Officer Chris Ailman. Chris, great to have you back on the show.
Good to see you, Morgan. Thank you.
So given the fact that you have posted those double-digit returns, I wonder what you think about the markets here, as stocks seem to be climbing this wall of worry, and yet it seems to be record high after record high after record high.
Isn't that amazing? I mean, just the last 10 minutes of coverage, you ran through the litany of concerns. Sam Shepard talks about the potential fall of Afghanistan and the impact then of the Delta variant, house flipping. And yet on the other side, we talk about all-time new highs in the market. So I think we have to recognize the market is not focused as much on the virus as it is on earnings and really on the Fed.
So in terms of the Fed, I mean, we've certainly been getting quite a bit of commentary this week from a number of Fed officials. There's increased talk about taper. What are your expectations over the coming months, and how does that play out in equities and other markets?
Morgan, I've been saying for a while, you really got to pay attention to the 10-year bond. I think that's been the key. I mean, it hit a high. It started at 170 back in February. Now we're down at 135. And really, I think the Fed officials are talking taper because they've got to get that out into the market. They've got to get the market used to that word. It really will just depend on what Powell says at Jackson Hole at the end of the month and then what they say in September. They've got to start talking about tapering, and then eventually somewhere in 22 they'll taper because otherwise the market will react violently and we'll get that 5% pullback that Rick Santelli said that people haven't seen in a long time.
But so you don't think they'll be tapering at all this year? I mean, we had very clear talking about tapering today from Kaplan on CNBC with Steve Leisman, and he's done it with us on Closing Bell before that as well. I mean, the implication from him is tapering happens this year. Would that derail equities?
You know, I think if it did happen, it would. People are more focused in on Powell and exactly what he's saying. And we've seen that before. You get some dissension in the open market committee, and that's good. Whether it's planned or not, I don't know. But they do have very different perspectives depending on where their district is in the country. So, Wilford, you're going to see them, I think, talk about it so the market gets used to the idea. It's all going to come down. Today's CPI print was a nice low number. Oh, thank goodness. What about next month? What if this month gets revised? Personally, I think inflation is actually real and here. I'm feeling it. Other people feel it. But is it transitory? Jay Powell has his finger on the pulse of the market. So let's pay attention to what he says. I don't think they'll start tapering because it's so uncertain on how we come back and how we transition back to full work. We've obviously done really well virtual. Good grief, look at our performance, 27% off the charts. Morgan, you gave me a passing grade. I think we get triple A rating for that. But it's the fact that we've been able to add value working virtual. The team has performed fantastic. How do we all do when we're partially back? That's going to be a big question and long-winded answer, Roper, but I'm worried.
Yeah. Chris, over the years, we've had conversations about, you've been, I should say, very outspoken about things like Facebook and data and protections there and privacy and some of the governance issues there. ESG in general has been a big topic for you and for your funds as well. As the SEC, for better or worse, looks to actually better define and rein in companies' reporting around ESG topics, how do you think about it?
I think more information is more helpful for investors. We're a big proponent of seeing the SEC mandate some level of reporting. We can get into a debate for a long time about ESG and what does it mean, and is that investable information, or is it just anecdotal? I think it's future investment information. It really, literally belongs right up there with the financial information because it's more forward-looking. It's talking about risks to companies in the future, and that's what I care about. So I'm glad to see it. We're pushing it. We live and breathe ESG. There's no question about it in every segment of our portfolio because we think it's looking at business risk into the future. If you get rid of the lingo and just focus in on business risk, that's what we're all paying attention to. That's what management should pay attention to. Cyber is a classic example of a long-term risk that should be reported to investors so we know if they're paying attention, if they're doing something about it.